percentage of what the overall asset base is. But with most of our clients, it's a huge asset for them, and it makes sense, in order to cover it appropriately. So home, auto, personal property, and then protecting your net worth, which is tied to all of those, is the liability coverage, both inherent within the underlying policies as well as anything you do above and beyond that. And we're just concentrating on personal property and casualty insurance here, not professional and business owner type coverage, or professional type coverage for the different physicians that are out there. I mean, there's a whole host of different liability. Workman's compensation is a big item for manufacturing or construction type business owner clients. So that's a whole nother animal. I'm concentrating here more on personal property casualty insurance, which it's just about every one of our clients. The other reason I think it's incredibly important is I think it's affluent apathy at its finest. The amount of clients that have stuck with the same insurance, either carrier or agent or person, over a long period of time, never ever shop their coverage, never evaluate their coverage. The only time they may evaluate it is if there's a major life event, they move, someone, their children are coming on their auto insurance, and then they actually pay attention to what's been charged or over that time period. And or if the economy gets real bad, you see a lot of people that shop it and go to the lowest cost provider, even though their situation may not be disrupted enough that it makes sense for them to have to go down to a subpar carrier just to save dollars. But oftentimes that's when you see that it's charged. So typically the old adage, which you can use kind of when prospecting and talking with people, is that most property and casualty insurance coverage bring you in anywhere from 20 to 25% below where par is, and they'll move up anywhere from 5 to 10% every year up to par. Par's break even on a policy level. If you're past that time period, past 3 to 5 years with a certain carrier, most likely you're paying above par. And they moved that up and termed as inflationary type increases, but they're also moving you up to the level of they attracted your business at a lower level. They know that you're more apt to not move and change that coverage due to the old consideration that if you move coverage, you're more apt to get dropped, or it's just not of they feel it's a loyalty measure that they have to be loyal in order to get their claim paid. On the other side, I'd say that was much more prevalent and made a lot more sense 15, 20 years ago. That's kind of been less and less of the case over the course of the last 10, 15 years. But it's not shopped very often. It's not quoted. So if they get you as a client, they tend to keep you as a client. So just know that as it relates to our clients, which are typically busy and don't have a whole lot of time to stay on top of this. That's some low-hanging fruit at times where you can evaluate, and not just to save dollars, but incredibly improve the coverage and keep the same price point is not unheard of in this particular area of the insurance world.
I was just messing with my phone, so you may have said this already. I promise I won't do that again. But yeah, you can't change it all the time because, unlike life insurance, they will ding you.
But
to that point of shopping it around, this is not one of those coverages that traditionally is easy or doesn't make financially sense to shop every 2 years. Certainly, if there's service issues, significant price hike, all that,